guys, welcome back to Tax Q&A. Today, I'll be answering questions around TDS on salary. Let's get started. Alright, TDS is that part of your income that never really reaches your bank account. Think of it like this. You ask your friend to pass on the pizza box, and before passing it to you, they snag a slice for themselves. That missing slice, that's your TDS, or tax deducted as source. Essentially, whenever you earn any income, the entity paying you deducts tax before handing it over and deposits it with the government. This way, the government ensures that we are paying our fair share of taxes on time and there's less room for any default. One of the most common examples is the salary that you receive, where your employer deducts TDS from your salary before paying you. So the next time you're wondering why your in-hand salary doesn't match the CTC, this can very well be one of the reasons. So to calculate your TDS, this is what your employer does. They tally up your total salary, including various components like allowances, perquisites, etc. Subtract eligible deductions, determine your income slab and net tax liability, and finally, deduct the appropriate amount from your monthly salary. Say you have a salary of 12 lakhs per annum, on which you can claim a standard deduction of Rs 50,000. Post this, your taxable salary would be 11.5 lakhs. And according to the new regime, your tax liability would become 85,800 rupees. Hence, your employer would deduct a TDS of Rs 7,150 every month. This calculation would be different in case of the old regime, and we've covered it in our tax Q&A thread. The link is in the description. Simple, just earn less money. I mean, not literally. But to lower the TDS burden, you'll have to reduce your taxable income. This can be done by making use of various deductions, like ATC, if you invest in tax-saving instruments like ELSS, PPF, etc. ATD, if you pay medical insurance premiums, and many more. Then, some employers also offer allowances in the form of a Flexi-benefits plan, where you can customize your CTC based on what allowance you need. And these are then deducted from your taxable salary. You should even compare your tax liability as per the old and the new regime and analyze which one's better for you. And finally, remember to declare all of this to your employer at the start of the financial year so that they can calculate your TDS accordingly. Okay, generally, in most cases, the TDS is deducted as per your tax liability. However, if excess TDS was deducted on your salary, you can claim a refund of it by filing your ITR before the due date. No, this is because you get a tax rebate on an income of up to Rs 7 lakhs if you've opted for the new regime. Moreover, you also get a standard deduction of Rs 50,000 on salary income, which means you'll have a tax-free income of Rs 7.5 lakhs and hence no TDS either. Okay, a lot of people have this question. See, TDS is not different from income tax. It is rather one of the ways government collects income tax. Now, because your employer is already deducting TDS from your salary and paying it to the government on your behalf, you won't have to pay income tax separately. However, for incomes like capital gains, interest, dividend, etc., where TDS is not applicable or is applicable at a lower rate, you will have to pay taxes separately. And with that, it's a wrap. If Google search is too much work for you, Quora is full of opinions, then you should check out Tax Q&A, where you can toss questions and our tax experts give quality answers and share their insights. And hey, don't forget to like and subscribe so you do not miss out on what's coming next. Catch you in the next one.